A solid day for stocks, maybe slowing down a little bit as yesterday's breadth and participation wasn't quite there throughout our session today, but it was still an overall continuation as S&Ps just keep grinding higher and moving on forward past 5,400 and now past 5,450. So as volatility drops and equities rise, yellow lights looking like maybe we could get back green, but I think that's basically at the highs. So the bar here is still pretty elevated, but if we get a big rip tomorrow and maybe we start pushing into the 55s and getting above the range that we were in from about 2.5 weeks ago, then that would be pretty impressive. Look at the chart here for the last 30 days in S&Ps, and we're making progress. VIX still above where it was July 10th, but obviously we've come down from the big crash. So this is all working. This is all good. You can see that kind of chunk of range that we were in for the S&Ps there, blue line before we broke down. That's where we're at right now. So if tomorrow we get low jobless claims and high retail sales, why wouldn't we extend the rally some more? But tomorrow, I think, is kind of the big one for this week, because generally we know the path for the Fed, they're going to cut. It's going to be really hard to get out of it this time. Even if Powell wants to play some hardball, 25, very likely now. Basically a certainty given some of the weakness in the data and unemployment that's been rising. That means that the question for rates really is not where they're going at this point, but why. And of course, the freak out in the market over the last couple of weeks, but dating back a month since the failed rotation, is that maybe rates are going down for the wrong reason, that we've had to crush output to stem inflation. And that's where tomorrow's going to be really important. And that's where I'm also watching the Russell participation, because the small caps faded today. And they tried to start out the strongest early on after CPI. And that's what happened, of course, after the last CPI that began that whole failed rotation. Blue line being the Russell there, the left side of the chart is around that previous inflation print on July 10th. So that ripped the Russell, of course. That was the big rotation. That was the top of the NASDAQ. Ultimately, that netted out to be a negative thing. During that time, the yield curve did the bull steepening, which is the late cycle type behavior. And since then, those 10s and the 2s have had a little bit of bull flattening. But the net move has still been one saying that we're going to get cuts because we need them and because the economy is slowing down too much. That's where the Russell fade today is a little bit of a reminder that that's still the issue that we're dealing with. Also, the fact that you've got Bitcoin looking soft again today, while the dollar has also generally been soft. The same example basically being the way yields have come down and stocks have come down as the dollar softened up, Bitcoin's been weak, and that tells us again that we're at the juncture where bad data are obviously not risk on pieces of information. That means tomorrow's got to go well. If we miss, if we climb back up towards 350 in jobless claims, market's not going to like that. And if retail sales aren't good, you've got the Walmart element too that could work into it, but tomorrow morning is where the action should be. And at least if we can get half of those data points in the right direction, it seems like we're well supported on stocks, but I think it's going to have to be pretty good numbers for us to suddenly start breaching even more technical levels to the upside. If not, maybe resistance finally kicks in for a little bit of bearish chop. Root for those numbers to be good. That's what you want. We need it. The economy needs it. That's what the market's been telling you.